So today, I want to talk about something that's rarely broken down in a real way, how the top 1% actually pick their stocks. And I don't mean traders or index-only investors. I'm talking about people who build wealth over time by making concentrated, high-conviction decisions. The kind of investors who don't need 100 different stocks in their portfolio because they know how to find just a few that really matter. So I want to break down what exactly they do and what they look for that the average person misses. And I want to break this down by walking through 3 things that the top 1% consistently do when picking stocks. And these are simple, but completely change the way you approach investing once you internalize them. So the first point is that they look for uncommon insight, not simply just good metrics. You see, most people scan for revenue growth and low debt and then call it a day. But the top 1% aren't just looking at what's already obvious in a financial statement. They're looking for real insight, something most of the market hasn't noticed yet, or something that the market is still mispricing. And this could be a shift in how the company operates, a misunderstood product, or even a counter-narrative the mainstream hasn't caught on to yet. And this is where a lot of my conviction in Palantir came from. When I first looked at it, all the headlines were negative, analysts were trashing it, and the financials didn't look great at a first glance. But underneath all the noise, I saw sticky government contracts, a unique business model, and a founder who wasn't playing the short-term Wall Street game. And that disconnect between perception and reality, that's what the 1% are looking for, because that gap is where all the upside lives. Now onto the second point. They filter ideas through a conviction stack. You see, when most people find a stock that they like, they buy a little, then start researching afterwards to justify it. But the top 1% have filters, meaning layers of reasoning that help them decide before they buy, where each layer either strengthens or weakens their thesis. They ask things like, who's running this company? What's their track record? What's the real problem that the company solves? And is their business model scalable? And keep in mind, they're not looking for perfection here. They're just looking for alignment. And when multiple conviction layers stack up, they tend to go in heavier. And that's exactly how I treated Palantir. I didn't buy it because it sounded cool, even though it does. I studied their software, I watched how they talked about defense, commercial expansion, and AI infrastructure, and I tracked the founder's behavior over the years. And each layer made me more and more confident, and that confidence is what let me hold through volatility and keep adding when everyone else was running away. And for the third point, they understand narrative flow. And I think this one is massively overrated, because the best investors understand that perception drives price, at least in the short to mid-term. So while investing based on numbers definitely has its place, they also invest based on timing the narrative, meaning they look for companies whose stories are still forming, all before Wall Street catches on. I mean, think about it. Before Tesla was known by everybody, it was a tiny and risky EV company that most people thought would fail. While the revenue eventually changed, it was the forward-thinking narrative that people began to understand, and the belief systems around those businesses shifted. And once that momentum builds, price usually tends to follow. This means investing in companies while they're still misunderstood. I hate to keep coming back to Palantir, but everyone was focused on the fact that they weren't profitable or that they were too closely tied to the government. Meanwhile, I was focused on what they could become, a full-stack AI and data infrastructure platform used by the most powerful institutions in the world. Basically, I was betting on what the story would evolve into, not just what it was at the moment. So if you're always investing based on what everyone else knows, you're definitely too late. But if you train yourself to recognize an early, emerging narrative, one that makes sense but hasn't gone mainstream yet, that's where the real upside can come from. And these are just 3 patterns that I've seen repeated over and over again by investors who actually win in the long run. The common thread is simple. They think long term, they build deep conviction before buying, and they don't care about being early or unpopular. So if you enjoyed this breakdown, you can actually watch another video I did right here on how I'm able to get 100% returns every year, where I walk through how my portfolio has transformed over the last 5 years. Anyway, thanks for watching, and I'll catch you next time.